Carl, thanks for being here.
Good to be with you.
Carl, central banks around the world have been talking about financial stability for some time. What exactly do they mean?
Well, financial stability is a term that is thrown around a lot, and it's not one that's well defined, but I would characterize it this way. It's a set of conditions in markets that don't raise the risk that you will have an implosion or a big correction that would cause a destabilization of the underlying economy. We've just had a lesson in 2008 of what happens when markets go into excess and then revert, creating tremendous consequences for unemployment and economic activity.
Do you see these signs that markets today are reaching unsustainable levels?
Everybody's on guard for this, especially given the recent experience with the great financial crisis. There are armies of people in central banks around the world combing the globe for markets that might be offsides. A couple that have come up recently are that high yield debt for companies whose credit is a little bit more marginal have been receiving a lot of attention from investors, including bonds issued by Greece, which came out recently and had 6 times the demand as the amount that they were offering. In addition, we may be seeing in some cities, in some countries, the renewal of a housing bubble, which we certainly will want to keep under control.
What are the steps that a central bank can take to reduce the threat of financial instability?
This has been the subject of a lot of debate within central banks, both here and in Europe. On the one hand, a central bank could use its supervision capability and go into firms and warn them that certain areas were of concern to them and suggest that the credit that they're extending to that sector needs to be looked at more carefully. On the other hand, a way that they could do it is simply by raising interest rates, which would tend to choke off a lot of economic activity, both good and bad. So when that day comes, it's going to be a very difficult decision as to whether to act, and if so, what tools to use.
How do you assess the ability of central banks to be successful at their efforts?
Unfortunately, I'm not optimistic. The track record of central banks at first diagnosing areas where there is an excess and then doing something successful to combat it is relatively thin. There are all kinds of political pressures, a desire to avoid unwanted consequences, and in general, occasionally there is paralysis as well. So while they're talking and saying all the right things, I worry very much when the day comes that they won't be able to pull the trigger.
Carl, thanks very much.
Good to be with you.
Thank you for listening. For more insights from our economic research team, visit northerntrust.com/view.